Good day, everybody. Brian here from quantlabsnet.com. So this is going to be a new video that will be a trailer for our Quant Labs channel to summarize everything the last, call it 2 years of development, research, and the like. So let me get to where we need to go. Okay, so what you're looking at is my channel. I just put up a video here, almost an hour long. This is a video going to make reference to and what I'm going to show you here on this particular summarized video with the slide deck. So it's called Stop Hand Coding: How to Build an Interactive Brokers Trading Bot Using AI. Okay. So we're going to make reference to that. So just give me a second here and we're going to present something. Voila. Okay. So what we're looking at is how the institutions with AI, modern day quant stuff. So essentially, it's kind of like running this pipeline institutional command. Um, and what we're doing here is we're going from replacing manual coding, hand coding, with agent orchestration. We're going to use high frequency futures. Now that's high frequency of data, not trading, but you could lead into that. Focusing right now on micro contracts and working with institutional order flow from Rhythmic, but there's two versions out. We got the interactive brokers and the Rhythmic. So what we're trying to do here is we're trying to build out a verifiable, scalable alpha generation pipeline and showcase that to ultimately institutions. So the old way it used to be, which is kind of deprecated, building out these manual C++ boilerplates with low-level coding, which is really no longer an advantage because the coding coming out of AI today is just probably better, highly more optimized and more efficient. You just can't compete against a machine that's generating code. So this involves prompting. We can build out a research agent, in our case, via news, build out a math agent, which is combined with the news, and then get a coding agent using enterprise tools. In our case, I'm using Codex 5.3. If money is a problem for you, you can use Quant, which is kind of good. And there's always new and upcoming ones. In our case, we're also using Claude Code, and which is way more expensive, but it's just better. You pay what you get for it, basically. So out of that, what we're doing is from an informational architecture, we're generating basically from news to hopefully generating alpha, beating the markets via trading. So in this case, we're using 30 global news sources from likes of CNBC, Bloomberg, which produces about 300 pages of raw text daily, or every time I run this process. Out of that, we generate a summarized AI agent, summarized engine. Sorry, yeah, engine. What that does, it will go through all the regional, allocated, macroeconomic events, and it'll generate a report, a structured trading report in PDF format, and it's rigorous and it's using a lot of institutional logic. So if you focus reading that every day, that will help you get in the mindset of option trading and futures from an institutional level because it adds in a lot of risk and the logic why that is. And I have made references in that 1 hour video where to go that's available free on my forum to see examples of that. And the idea here is to generate bots, trading strategies in Python. And we can generate about 10 to 12 a day, which have unique trading algorithms as well. All right, so the stage that we go through is quite simple, but hard to replicate. So what we're doing is we're generating news, testing it, and out of that we get 100 to 200 bots. We have to go through that amount roughly to be much higher. And what we're trying to do is out of that we're generating high volume to filter out market noise, and when you look at the best, the one of the web apps, a demo, in that referred video, we can be up to 29 simulated trading bots. Out of that, what we're looking for is what we call the profit bucket, which is our second phase. And now that we're paper trading is more simulating and monitoring, and this is all generated via AI, really. And we currently watch about 13 bots. And what we're looking for consistently over a couple of days, a couple of weeks, but this is using real market data. Okay. And we're trying to look for trading bot strategies that give us 70 to 80% win ratio consistently. And I'll give you a very, very high probability. A lot of those trading strategies fail a lot. It's not even 1% will make it. And then that will, all those are going to sit in the profit bucket. Then we have our live trading for execution of orders, and we fund uh, two accounts, which will go into Rhythmic and Interactive Brokers. So as I said, maybe 1 out of 200 roughly may get into this bucket, and we trade institutional quality strategies against real life capital. So out of that, one of the hard parts that a lot of people may not go through is the asset selection matrix. And that's driven by capital efficiency. So if you look on the y-axis, what we're looking for is liquidity and tick volume. Um, so the top in just out of the futures market, micro ES or ES will be the highest. Um, for us, where we're at, the only strategy that seems to be good for live trading, which is our sweet spot, is gold, GC, making sure I got to sit up. It's highly leveraged, risk minimized exposure, and scales perfectly because the volatility is kind of a lot lower than crypto. When you start looking at Ethereum and Bitcoin, we start to move into extreme volatility. And because of that, this is where the capital efficiency becomes very important. You have to factor in your margin requirement. So with gold, it's high, but it's much lower than Bitcoin or Ethereum. And we get higher probability of profit from that. And that's because there's less volatility with gold versus the crypto ones. So that lowers the margin requirement. And that's why we have this kind of matrix. Out of that, as an example, we are always looking for the higher, deeper liquidity to generate and guarantee fills and avoid the slippage. So in our case, in one of the in our forum that the video refers to, again, you can get access to it and see it for yourself, is that the ES will generate roughly in one snapshot 42,000 plus ticks, which becomes the undeniable king of liquidity. And it's safe and it's institutional. A lot of institutions will park here. Then there's gold, the GC at 3,500 ticks, but it's reliable and it could possibly be an alpha generator. And then we get these are all the popular ones. Just this is why these are picked. With Bitcoin, it's 1,000 ticks, and that's the same snapshot with Ethereum at 669. So when you refer back, that's why gold seems to be the better one. And gold is not picked on purpose. Just out of that process, the life cycle process I showed you, the only one that came out of it so far was gold. We do have an Ethereum Bitcoin strategy that is very highly profitable, but it returns very low, kind of like on the pennies with the high volatility, and it wins probably about 65% as well. Here's the other thing I talked about the different brokers. So in our case, we have Rhythmic. Most popular futures brokers will offer Rhythmic as their data connection and order platform, order where all the orders take place on. So Rhythmic's pretty well the best option out there for retail traders. It's lower cost. And it's been out, they've been around for a long time, a couple of decades. So there's still institutional operators on there, the hedge funds and the like. Uh, some of them are still generating alpha, and apparently there's still some firms running high frequency trading on Rhythmic through the Aurora CME data center in Illinois. Uh, when it comes to interactive brokers, the function here really there's only one function, as I refer in that video, the hour one. We're just using interactive brokers for third-party verification. I don't need to use interactive brokers if I'm on my own and don't really care about showcasing all this stuff. But I do that for third-party verification and to show receipt generation or alpha can be generated via this, and to showcase that verification in real time. And Interactive Broker is the only broker that supports that. Then we get in the infrastructure, we have a direct pipeline, potentially, if we've got the big capital, 500,000 probably starting, where we can go into the CME Aurora data center, and that's where you can get into C++, Python APIs for FPGA level or just high frequency trading. Now, when I say that, it's meaning real HFT, none of this overseas so-called experts and gurus doing it all on MetaTrader. It's a joke through some schlocky forex broker. I go on about that. Anyways, well, the infrastructure on interactive brokers is very slow for the retail market, and I'm going to be honest, it's plagued with a lot of latency on the data side. So I don't really take interactive brokers all that serious. It's not my priority, but I will still like to see some profit come out of it for that third party verification. Also, with the user base, there's going to be a lot of high frequency trading shops. Well, there's a few still. They have better options now. But a lot of hedge funds are still there. Some banks as well using Rhythmic and hedge funds. The user base on interactive brokers, more retail traders. It's maybe some of them actually will show public track records, but uh, I don't know. I got opinions on it. I'll probably be one of the only ones hopefully doing that. The status as well with Rhythmic is quite good. It's superior to interactive brokers for the speed. With the interactive brokers, it's kind of used strictly, in my case, used for, as I said, third party verifications. Here's another thing that people may not know: the difference between a Rhythmic, if you're on a or a data center over a certain amount of milliseconds, uh, and you're going through retail broker like interactive brokers, you'll get quite a few stale quotes. I show that in that our video. HFT shops are going to take advantage of that. There's going to be an opportunity there for 20 millisecond coherence test. They run that, then they have mathematically programmed to never cross the live market, so they won't get flagged by regulators. And they'll specifically target lagging stale quotes for risk-free arbitrage that they can take advantage of these retail updates. And I'm sure there's a lot of other big platforms in the same space as well. So if you are interested in following this kind of mindset, using data mining tactics, using quantitative microstructure strategies, traditionally kept by elite firms. Some of their techniques are using spoofing and layering, manipulating orders, flow, toxicity filtering to engineer artificial liquidity. There's also a momentum ignition where they trigger algorithmic cascades to force retail stop losses. So you'll see that classic in Robinhood as an example, because they kind of sell their order flow to these type of shops. When you get good at it, and I mean it's rare to find that, but FPGA is an option going into something like the CME or data centers. Some shops will use C++ and low-level logic. Some will also use HDL, which is one of the FPGA languages, using HDL compilation. And what that will do is just two examples using latency arbitrage, maybe as examples between Dow Jones and Mexican peso. Just there's just so many different examples out there. So out of this, layers seem to be kind of reversed here, but this is a synthesis of the modern day quant architecture. It's fully automated, edge-to-edge systematic portfolio management machine. So it's no longer going through the druggery of hand coding and math. The AI can do it all. If you watch that video, I got some examples in there. So in our case, you use the AI for orchestration, use it with the VS Code, maybe using Claude Code extension, maybe use a different model for parsing from different news sources and generate that PDF structured logic I said. Then you get into the engines where there's a bot funnel. And basically, as I've shown you, there's that three-phase life cycle. Generate a couple every couple of a month, maybe a couple of hundred generated, dynamically generated agents, trading bots of strategies. And right now, from what I'm seeing, it's generated to one live mathematically proven algorithm using, as I said, for live trading at this point right now is gold directional GC. And then we have a next layer of execution. We're using both uh, brokers, as I said, for Rhythmic for the just for the speed. We'll leave it at that. And then the IBKR using the real time to show real time third party verification. Next layer, we have the battlefield of all the different assets with that matrix, highly liquid, capital efficient. We'd love to be in the micro ES. I just don't think we're getting consistent momentum yet. The easy money, as they call it, which is the S&P 500 or one of the other indice market, indice markets, and then you have the gold futures as well. So in our case, what matters is there's bottlenecks. So we have ultimately you're kind of like operating like a systematic portfolio manager. By the way, they get paid in the millions now. I think Quant coding, Quant research, confirmation pretty well came out of Ken Griffin at Citadel on this. I wouldn't be surprised at some point he will go in that direction where those jobs may not be as many as there are. I mean, the competition is already fierce. They'll take a lot of these third party gurus that showcase all the interviews and all the tricks to become an all-star coder to get in these firms. I think that those firms are kind of refocusing more on the systematic manager where trading will be your number one skill set. As I shown that video, you can use AI to generate your quant algorithms and your low level coding as well from AI. It's getting better and better and better and scaling up. And those jobs I think are going to be pretty hard to find down the road. So we have the AI handles a lot of the syntax coding. It is no longer a competitive advantage. It's really the opportunities you're looking at and staying out of the crowded trades and the simpler trades where everybody's going to go into. Um, so these institutions will pay for the operators who understand the math rigor, margin risk, and fundamental derivative pricing. So I think I'll all merge and become a self-contained portfolio manager. So the old way with the manual C++ syntax, again, it's automated, but the old days they'd use some kind of pricing for Black-Scholes, maybe use a delta effect, and then risk build out some way to manage margin as well. So in our case, the pipeline's quite simple. Um, if you start out, it's all about motivation on you and keep it low cost, but it gets pretty pricey over as you scale up. So if you really want to trade like a institution, the best place to go is at level one, the foundation, using one of our little software packages with AI, Claude code with a working example in Python for interactive brokers, paper trading. So you're just basically prompting. We have some PDFs that show you the prompts, templates. We're using the VS Code integration for basic agent deployment. Then you can move up and into a quant analytics membership. And what that does, it gives you AI generated trading reports. One of the PDFs I make reference to that in that video and shows you how institutions are measuring risk, where they're allocating their trades, and blah blah blah. and they're all most of them are going to be doing any of the jobs, any of the big money is going to be done using futures. More importantly, the options. Okay, and then that's the next level from a trading perspective. So you don't have to know the tech, really, um, but you got to understand the mechanics. So we have the 26-day course, which the that video goes through. It's all generated by AI, originating from a UC Davis course, which is quite good. It's quite old, but the whole foundation of futures and option trading has not changed. I mean, it's been modernized by computers and automation now with AI. So what that course does is a 26-day drip fed piece by piece of content showing you ultimately how to build safe uh, models in it for trading quantitative techniques for options and futures. And that's the ultimate way to build a stable, predictable wealth generation for yourself. And once you get something stable, this can carry you through retirement to the day you die. So you don't have to be dependent upon pensions that are getting cut. You don't have to be dependent on jobs that are being cut because of AI. But as I said, you have to be highly, highly motivated. And ultimately, if you get very comfortable with it and you want to understand how a lot of the quant firms are trading from the research perspective, with Python and C++ research modules that I have in my file share, there's some FPGA code, some examples of market making systems as well. So, but again, that's big money. Even I don't really do it. You could do it in crypto, but we know about the crypto retail spot market's kind of spotty in terms of, hey, it could be no different than a casino because it's not regulated. So that's pretty well everything I want to show you. Again, that reference video is this one right here. Stop hand coding how to build an interactive brokers trading bot at the channel quantlabsnet.com. So that's pretty well it. Um, and just wanted to show you that. So it's all about motivation. I'll put all the proper links to get you started. And that's going to be in the description. If you got comments, go to our forum and ask away. That's what it's for. And we shall thank you, or I shall thank you for watching this. And good luck to you. You got to be motivated, my folks, and put the work in. I can only carry you so far. Over now. Have a good day.